Hello and welcome to Module 4, where we shift our focus to the foundational players in the payments ecosystem, traditional banks. In the previous modules, we've explored credit card systems, payment networks, and alternative payment methods. But none of these would exist without the backbone of the financial system, banks. In today's lecture, we'll dive into the critical role banks play in the payment ecosystem. From facilitating transactions to providing security and ensuring liquidity, banks are at the heart of it all. By the end of this lecture, you'll have a comprehensive understanding of how traditional banks fit into the global payment system and why they're essential players in every transaction that takes place. The core function of banks in payments. At the most basic level, banks are financial intermediaries. Their role in the payment ecosystem is to connect consumers, businesses, and institutions, ensuring that money flows seamlessly across the globe. Banks primarily deal with the movement of funds, but they also provide essential services like depository functions. Banks hold your money in various types of accounts, checking, savings, or time deposits, making it available for payments. Credit services. Banks issue loans, credit cards, and overdraft protection, which allow individuals and businesses to spend more than they have in their accounts, facilitating credit-based transactions. Clearing and settlement. Banks facilitate the clearing of transactions and settle payments between parties, ensuring that funds move from the payer's account to the payee's account. How banks enable transactions. The movement of money from one account to another is facilitated by a well-coordinated process involving different departments within the bank and external partners like card networks and payment processors. Here's how banks enable payments. Account ownership. A bank provides account holders with the ability to make payments by granting access to their funds. These accounts are the foundation of all payment systems. Payment instruments. Banks issue debit cards, credit cards, checks, and even offer online bank transfers to facilitate payments. Authorization and verification. When a payment is initiated, banks verify whether the payer has sufficient funds, in the case of debit, or credit, in the case of credit. They also check the security of the transaction and validate the payer's identity, which helps prevent fraud. The clearing and settlement process. One of the most important roles banks play in the payment system is clearing and settlement. Clearing. This is the process where transaction details are exchanged between banks to confirm that money can be transferred. For example, when you make an online payment with a credit card, your bank, the issuing bank, sends transaction details to the merchant's bank, the acquiring bank. Settlement. Once the transaction is cleared, the actual transfer of money happens. This ensures that the payer's bank deducts the appropriate amount from the account and deposits it into the payee's account. This process happens seamlessly and in real time for the most part, but it requires secure and reliable systems to operate correctly. This is why banks play such a crucial role in ensuring smooth and safe transactions. Types of payment systems banks use. Banks don't just handle physical cash. They're involved in various types of payment systems. Here are a few. Real-time payments, RTP. Banks are increasingly adopting real-time payment systems where funds are transferred instantly between accounts, making it faster and more efficient to complete transactions. Examples include systems like UPI in India or Zelle in the US. Automated Clearinghouse, ACH. ACH is widely used in countries like the US, for batch payments, typically for direct deposits, bill payments, and payroll processing. It's a slower, more cost-effective method compared to real-time payments. SWIFT. For international payments, banks use the SWIFT network to communicate payment instructions and move money across borders. SWIFT is crucial for cross-border transactions, facilitating both transfers and messages between banks. Wire transfers. Wire transfers are used for high-value, urgent transactions and are typically processed in real time or within a few hours, depending on the institution. Card networks. Banks issue cards that are part of global networks like Visa, Mastercard, and American Express, allowing payments to be processed across various systems. These networks act as intermediaries, ensuring that payment data flows securely from one party to another. Regulatory oversight and risk management. Banks are heavily regulated, and their role in the payment system requires them to follow strict rules and regulations, especially when it comes to anti-money laundering, AML, and Know Your Customer, KYC protocols. Key regulations in banking and payments. PCI DSS, Payment Card, Industry Data Security Standard mandates how banks must protect cardholder information. AML. Banks are required to monitor transactions for suspicious activity that might indicate money laundering or fraud. KYC. Know Your Customer regulations require banks to verify the identities of their clients to prevent fraud and terrorism financing. Risk management is integral to a bank's operation in the payment ecosystem. They must manage liquidity risks, fraud risks, and counterparty risks to ensure the financial system stays secure. The role of central banks. Central banks, such as the Federal Reserve in the US or the European Central Bank, play a key role in overseeing the payment systems used by commercial banks. They manage national payment systems, set interest rates, and regulate monetary policy, ensuring a stable financial environment for all participants. Central banks are also exploring central bank digital currencies, CBDCs, which could redefine the role of banks in payments by making digital currencies directly issued by the central bank available to the public, potentially replacing traditional payment methods. Collaboration between banks and fintechs. While banks traditionally controlled the payment space, the rise of fintechs has introduced new ways of processing payments. But rather than competing, banks and fintechs are increasingly collaborating. Fintechs focus on innovation, offering tools like mobile wallets, digital banking services, and faster payment processing, while banks provide the underlying infrastructure, regulatory compliance, and security. Together, they are shaping the future of payments by offering consumers new, efficient, and secure ways to manage their finances. Conclusion. To wrap up, banks are the cornerstone of the payment ecosystem. They facilitate payments through various systems like ACH, card networks, and real-time payments. They also provide the security, risk management, and regulatory oversight that ensures smooth, safe, and compliant transactions. Thanks for tuning in, and I look forward to seeing you in the next session.